in your life, Assemblymember.
Hello, everyone. It's great to see you here today. I am your Assembly member, Dr. Darshana Patel, and I am so honored to represent you in Sacramento. One of my top priorities is addressing affordability issues. And a big part of this is making sure that people can find homes that fit their needs and budgets in the communities where they live and work. Many families struggle with the rising cost of housing, making it harder than ever to achieve that American dream of home ownership. Everyone deserves a chance to live in a stable, welcoming community, and homeownership plays an important role in building those stronger communities. So while I continue to work on cost of living issues in Sacramento, I want to make sure that you know about the resources available now to help you on the path to buying your home. Thank you for joining us this evening to learn more about programs for first-time home buyers through California's Housing Finance Agency, CalHFA. Our goal this evening is to help you and your family feel informed and prepared as you explore your path to buying a home. I'd like to introduce our guest speaker, Natasha Dowdy. Natasha is an advocate for making the dream of affordable home ownership a reality for California residents. She serves as the Lender Training Program Analyst for CalHFA and brings over 15 years of experience in the mortgage industry. Her deep knowledge and passion for the field drive her commitment to educating others like you and helping prospective homeowners navigate the complexities of the lending process. Natasha's work ensures that people have the tools and information they need to achieve their dream of owning a home. Thank you, Natasha, for sharing your expertise with us this evening, and please take advantage of the Q&A after the presentation. Natasha and my staff member, Gonzalo Rocha Vasquez, are here to answer your questions and help you through this process. Thank you again for spending your evening with us. And now let's hear from our guest speaker, Natasha Dowdy.
Thank you so much. I welcome and thank you for having me this evening, and I appreciate the warm welcome. So I am going to share my screen. I have a lot of information to go over um, regarding CalHFA and the programs that we offer. The first slide here on the screen, you will see our program training slide. At the bottom of the slide, there's some great contact information. You have our line to our single family department as well as our email address. If you have any questions whatsoever, you can send an email to our lender training email, or you can contact us directly at the 8033 number. At the end of the presentation, you will have my contact information, so please reach out if you have any additional questions about the information that I'm going to present today. But let's get started. Who is CalHFA? Who are we? The California Housing Finance Agency. We are a state government agency that was founded in 1975 to help families from low to moderate income ranges to achieve the dreams of homeownership. We offer special financing, down payment assistance, and closing cost assistance to those looking to purchase their first home. The programs that I'm going to discuss today, they are administered at no cost to taxpayers. So you do not have to worry about your taxpayer dollars going to fund the programs that I'm going to cover. And also the programs that I'm going to cover today, the funds are always available. As you all know, that in California, the cost of living is at an all-time high. You have the rising grocery prices, gas, rent continues to rise, and it's making it difficult for individuals and families to save money for their down payment. So I'm going to talk about a mix of programs that we have available to help you and your family achieve the dream of homeownership. Because our mission at CalHFA is to have all Californians living in a home that they can afford. And let's get started. So before I talk about the programs that we offer at CalHFA, I just first want to make sure you fully understand the multiple first mortgage options available to you when you're purchasing your first home. As you'll see here on the screen, you see that there's a conventional first mortgage option, as well as a FHA first mortgage option, and a VA first mortgage option or USDA. Our programs work with any of the first mortgages that you see on the screen here. Now, the first mortgage, it ranges. It depends on which first mortgage you qualify for, right? So working with a CalHFA approved lender, they'll be able to identify which first mortgage is right for you. Now, just some things to understand with a conventional first mortgage, the down payment, the minimum down payment, it can range anywhere between 3% to 5%. It just depends on your loan scenario. If you're going with an FHA first mortgage, your minimum down payment that you're required to bring in, it could be at least 3.5% of the purchase price. Now, if you're a veteran, anyone that served in the military, you have the ability to go with a VA first mortgage, and they offer 100% financing. And then there's also the USDA first mortgage, which allows you to purchase a home in a rural area, and they also allow 100% financing. Each of these first mortgages, they all have different requirements. Talking to that CalHFA approved lender, they'll be able to decipher which first mortgage is right for you. And then there's the closing costs. So when you're purchasing a home, not only do you have to come in with your minimum down payment, you also have to come in with closing costs. And what are closing costs, might you ask? They are the fees that you pay above the purchase price. Generally, those fees can range anywhere between 3% and 6%. And that's a lot of money when you're factoring in coming in with your minimum down payment plus closing costs. But don't worry, we're going to talk about the programs that are available to you to help you get into that first home. Now, on the screen, you will see a list of items that are included in closing costs. It might be your lender or loan origination fee, or prepaid taxes and insurance, or you might want to buy down your rate. That is considered a closing cost. You also might have escrow fees or title insurance fees. Those are all considered closing costs. And we at CalHFA, we have programs to help you offset those payments so that whether you have money saved or you have just a little money saved, we have programs to help you get into that home without depleting your savings for that purchase. Now, the first program that I'm going to talk about that we offer at CalHFA is our My Home Assistance program. Now, this program is rather unique because it works with any type of first mortgage. Remember, I mentioned conventional, FHA, VA, or USDA. Our My Home Assistance can be paired with any first mortgage. And that's the beauty of our My Home Assistance. Again, the funds are always available. And I'm sure you might be wondering, well, how does it actually work? Our My Home Assistance can lend you up to 3% or 3.5%, depending on which first mortgage you pair it with. Now, My Home is a silent loan. And when I mean silent loan, I mean it is a loan that you will eventually have to repay, but it's a loan that you don't have to make any monthly mortgage payments on. The payments are deferred. And the My Home Assistance loan has a small amount of interest accruing on that loan, and it's 1% simple interest. You can use this program with other programs, other grants, or other down payment assistance programs. But talking to a CalHFA lender, they're going to be able to assess which route is best for you. Now, I'm a visual person. I like to see how the program can help me. Just an example. And I came up with an example for you here. As you can see, if you're in the market for purchasing a home with a purchase price of $600,000, my home assistance on the conventional loan product can lend you $18,000 to go towards your down payment. And essentially, in most cases, that's 100% financing. Now, if you're looking to use our My Home Assistance program on an FHA first mortgage, My Home Assistance can lend you up to $21,000. And you can use those funds for down payment and or closing costs. It just depends on how you need that loan structured for you. Keep in mind, you also can use My Home Assistance on a VA or a USDA loan, and it can lend you $18,000. Now, if you remember, I mentioned that a VA or a USDA loan, they already offer 100% financing. The beauty of My Home Assistance is it can be used for either down payment or closing costs. And on a VA or a USDA loan, you can apply that $18,000 as a down payment, making that mortgage more affordable for you and your family. But keep in mind, My Home Assistance is required to be repaid if you decide to refinance on your first mortgage, or you decide to sell your property, or at the end of the 30-year term. It is a loan that you will eventually need to pay back, but it's there to help you get your foot in the door to home ownership. Now, the next program that we offer at CalHFA is our Cal Plus Zip program. Now, this program is built-in closing cost assistance. It's like a combo deal because you get either a first mortgage, which can be conventional, or FHA, and you can combine that with our My Home Assistance loan, plus you'll receive the ZIP loan. Now, the ZIP loan can lend you up to 3% or 2%, depending on what the need is. Now, that ZIP loan has zero interest accruing on that loan. So whatever you borrow is whatever you pay back. Now, here is an example with the same purchase price, $600,000. If you decided to apply for a conventional first mortgage, My Home would still lend you $18,000, and that ZIP lien would lend you up to $17,460. Now, keep in mind that ZIP loan is strictly to be used for closing costs. You cannot use that to pay off debt. You cannot use it to give you cash back in hand. It strictly has to be used for closing costs. You could use those ZIP funds to buy down your rate. You could use those ZIP funds to pay for that lender fee that I mentioned, any closing costs associated with your home purchase. Now, if you wanted to use our Cal Plus Zip on an FHA first mortgage, with your FHA first mortgage, My Home would lend you $21,000, and that ZIP loan would lend you $17,663 there to help you with closing costs. Now, keep in mind, My Home and ZIP, it is a silent loan on title, and you will be required to pay back the assistance if you decide to refinance, sell your home, or at the end of the 30-year term. Simply, our programs are there to help you get your foot in the door to home ownership with minimal out-of-pocket expenses. Okay, so our next program that we offer here at CalHFA is our Cal Plus Access program. This is a rather new program. We announced this program back in March of this year. And my Cal Plus Access program, it can be combined with either a conventional first mortgage or an FHA first mortgage. The beauty of this program is that My Access lien. It's a third lien. It replaces ZIP. So it's a third lien that can help you cover down payment or closing costs. Now, when you see Cal Plus Access, you're still getting a combo deal because you're getting either that FHA first mortgage or conventional, and it comes with the My Home Assistance program, and you'll have the My Access as a third lien. Now, the beauty of this program, when you layer the assistance on a conventional loan, you're getting that My Home Assistance, as you can see on the screen, and then My Access acts as a third lien on title. In total, in this transaction or scenario, you would receive a total of $32,000, and you can use that to apply it as a down payment. Keep in mind, the more of the down payment you have, the more affordable your first mortgage is because you are paying down that first loan. So keep that in mind. But you have the flexibility of using the My Access program either for down payment or closing costs. It just depends on what your needs are. And on an FHA program, if you're combining the My Access with an FHA first mortgage, it can lend you a total of $35,000 to apply to the down payment or closing costs, depending on what the needs are. Now, My Access works similar to My Home. My Access is a third lien on title. It does have a small amount of interest accruing on the loan at 1%. There's no monthly payments required on My Home or My Access, but you can make a payment if you opted to. You can make $100 payments or $20 payments a week. It's totally up to you. There's no prepayment penalty on any of our programs, so you do have that autonomy to make payments if you desired. My Access will be due and payable if you decide to refinance on your first mortgage or sell your property or at the end of the 30-year term. Now, I'd like to give you an example because I've thrown out 1% simple interest, and I want you to make sure you understand what that fully means. So it basically means that the interest isn't compounding. So let's say that you borrowed $20,000 on My Access. How that 1% simple interest would accrue would be $200 added to the original balance each year. So in year one, that's $20,000. Your balance would go up to $20,200. In year two, it would be $20,400 and so forth. That's if you decided not to make a payment, but it's up to you on what you feel the need to do so. I think the most important thing is noting that there's no monthly payments on the assistance, and our down payment and closing cost assistance programs doesn't affect the amount that you qualify on your first mortgage. So keep that in mind. Now, the next program that I'm going to highlight today, we don't really talk much about this particular program, the CalHFA FHA Limited 203K program. And this program is not for everyone. And not all CalHFA approved lenders offers this program. But I wanted to highlight the CalHFA FHA Limited 203K program because purchase prices are high, they're kind of high right now, and it's affecting the affordability of what individuals or families can buy. With the limited 203K program, this particular program allows you to finance up to $75,000 for minor repairs. Now, let me explain this. So you will have an FHA first mortgage, and if you find a home that's in need of repairs, like for instance, a bathroom remodel, or there's some kitchen appliances that you want to purchase for the home, or there's some electrical work that it's needed in that home, you can finance the cost of the repairs up to $75,000 plus receive down payment and closing cost assistance from CalHFA. Now, your job is to find a CalHFA approved lender that has a renovation department and who's willing to offer this program to you while using our CalHFA down payment and closing cost assistance. So it might be an option for you. You do have 9 months to complete the work after the loan has closed. So keep in mind that it's for minor repairs, nothing structural. So that is the key. The key is minor repairs, picking a lender that's CalHFA approved that offers this particular program with our down payment and closing cost assistance programs. Now, just like any other transaction or any other loan out there, there's always requirements. Always. And at CalHFA on this screen, this is a list of the requirements that we need to see. The first thing that you need to do if you're looking for a CalHFA transaction is to contact a CalHFA approved lender. That lender is going to assess your income. They're going to need to make sure that your income is within the income limits of our program. So our income limits is based off of the county in which you're looking to purchase in. So if you're looking to purchase in Sacramento County, the income limit is $239,000 in Sacramento County. And that means all borrowers on the loan, your income has to be less than $239,000. If you're looking to purchase a home in San Diego, all borrowers on the loan, your income would need to be at least under $258,000 to qualify for our program. And on the screen, you'll see a list of counties. Our program is available statewide. You do not have to worry about buying a home in a specific census tract because there are other programs that will restrict you to a certain area. Our program is available in any county throughout the state of California. We do have minimum credit score requirements. So if you're looking to go with a government loan, that's an FHA, VA, or USDA loan, your minimum credit score would need to be 640. And we're looking at the middle score of all borrowers on the loan. And if you're going with a conventional first mortgage, your minimum credit score would need to be at least a 680. In some cases, we will accept a 660 credit score. Granted, the lender would have to determine if you fall within the low income limits. We do require that all borrowers on the loan meet our definition of a first-time home buyer. And you'd be surprised of our definition. Our definition states that you cannot own a home that you currently live in within the last 3 years. So technically, we're only looking back at the last 3 years to determine if you owned a home or not. Some programs require you to never own a home, but we give leniency with that. So there's no ownership interest within the last 3 years with a property that you currently live in. If you have an investment property, and you can document that you have not lived in that investment property within the last 3 years, you could possibly meet our definition of a first-time home buyer. The requirement is to talk to a CalHFA approved lender so that they can determine whether or not you meet that definition. The lenders will also assess your income and they'll compare it to the debts that are on your credit report. And basically, they want to make sure that you can afford this home purchase. And there's a debt to income ratio that they're going to calculate. And lastly, we have homebuyer education requirements. At CalHFA, there's a total of 3 options available to you as a first-time home buyer. The first option is through eHome America. This is the most popular option out there because it's an 8-hour online self-paced course that you can complete any time of the day. There is a cost of $100 for you to take this course. And once you take the course and you have your interview call with the housing counselor, they will issue you a copy of the certificate. That certificate is valid for 1 year. Now, it's very important that if you're going to take the homebuyer education course, that you use the links on our website. On this screen is a copy of the link to get to the eHome Homebuyer Education course so that you can register. But I wouldn't register to take the course today or tomorrow. First, you want to make sure that you contact a CalHFA approved lender so that they can determine if you're qualified for our program or not. Now, this second option available to you is through NeighborWorks America or any HUD approved housing counselor. Now, this option is available for anyone that learns more by taking classes in person or virtual, like what we're doing today. You have the option to take that course through these two entities. Now, the cost may vary. It just depends on the location that you're signing up for. Once you take that course, that certificate that they issue you is valid for 1 year. So be mindful of that. And lastly, we have our property requirements. So if you are looking to use one of our programs, whether it's just our first mortgage by itself, or you wanted to use our first mortgage plus down payment and closing cost assistance, you must purchase a home that you and all borrowers on the loan plan to live in as your primary residence. Now, we're okay if you purchase a new construction home or a resale home. It just has to be identified as a 1 unit property. When I say 1 unit property, I mean a single family residence. It can have an accessory dwelling unit or a condo or manufactured home. If it's a manufactured home, it must be permanently affixed to the foundation and considered double wide. We do not lend on 2 units or any units of that matter. It has to be a 1 unit property. Now, when you're using our down payment assistance or closing cost assistance, we want to see that you have a home warranty in place. Now, it could be purchased by the seller or you could purchase that home warranty. That home warranty is there to protect you should anything break in the home, like appliances or your hot water heater or your HVAC unit. It's there to help offset the out-of-pocket expenses. It just needs to be in place for 1 year. We're okay with you purchasing a basic coverage warranty, or you can upgrade that home warranty to a premium coverage. We waive the home warranty if you're purchasing a new construction home because the builder will have the 1 year home warranty in place for you and your family. Now, I know that that was a lot of information. I know it was. This next slide is the most important thing for you to note. You do not have to remember the borrower requirements, not really the program requirements thus far, but the most important thing I know that you need to take away from this is how to select a CalHFA approved lender. What makes them unique? And these 4 items, I believe, is what makes a CalHFA lender unique and something that you need to keep in mind when you're selecting that lender to issue you your pre-approval and to complete your loan transaction. The first item would be the level of service that they offer to you. Are they responding to your calls? Are they able to answer your questions in a timely manner? Now, keep in mind, our lenders or any lender thus far, they're very busy. I mean, some might have a 1 to 2 day turnaround with returning calls, but you just want to make sure that do you feel comfortable with the level of service that they're offering you? The next important item, I think, is important when you're selecting a lender is the knowledge and resources that they offer and have on all of our CalHFA programs. You know, some lenders might not be well versed in CalHFA and what our programs can offer. So you definitely want to make sure that someone that you select is well educated and they have the resources available to you to help you along your home buying journey. The next important item is the programs that they have available. And this is important because if you are a veteran looking to use our program, not all lenders are approved to offer a VA loan. Not all lenders are approved to offer rate buy downs. So that's something that you need to make sure that you understand and ask questions on which programs they offer, if you can offer the a rate buy down, or if you're someone that's interested in the limited 203K program, do they offer that program? So please make sure you're asking questions, you're making a list, because I know that this process can be very, very daunting. I think making a list of questions and asking that lender or loan officer when you're making that decision. And lastly, the lender fee. CalHFA, we allow lenders to charge up to 3%. Very rare do we see a lender charging the full 3%. Most lenders will charge anywhere between 1% and 1.5%. So, or some may even charge 2%, but that lender fee will affect your closing costs. And that's something for you to keep in mind as well. All lenders will have access to the same rate. So that's important. So no lender is going to be able to offer you a different or better rate on our program if they're locking on that same day. But the lender fee is definitely an item that will set lenders apart, in addition to their resources and the knowledge that they're providing to you, because this is a big purchase, right? Now, I know that that was a lot. I am nearing the end, but I wanted to make sure that you understand the steps to the home buying process with CalHFA. The first thing that you need to do is find a CalHFA approved lender and get pre-approved. When you're going through the pre-approval process, you want to make sure that you're gathering your income documentation. So if you're a W-2 wage earner, make sure that you're pulling 30 days worth of paycheck stubs, at least your 2 years most recent W-2s. Also, you want to give them a copy of 3 months worth of bank statements. Those are a few items that they may want to see to get you pre-approved. Some lenders might vary on the documentation needs. The next step is to complete the homebuyer education course once your lender tells you you're pre-approved for a CalHFA program. That is the first thing. The second thing that you need to do is take the course immediately. Don't wait. But remember, once you complete that homebuyer education course, the certificate is valid for 1 year. After you complete the course, start shopping for a property and make an offer on your home that you find. And when you're shopping for a property, you might connect with a realtor or a real estate agent. It's completely up to you on who you select for when you're shopping for a home. The fourth step is to, once you make that offer and you get your offer accepted by the seller, you'll then provide a fully executed contract to the lender that you selected to work with. They will then open escrow and start ordering all the inspections, whether it be an appraisal inspection or a home inspection or any inspections that you feel the need to receive on this home purchase. Once you get the inspections in, the lender may also request other conditions for you. It's so important that you respond to their request. Don't change jobs. Don't incur any more debt. No auto purchases because that can affect how much you qualify for when you're purchasing your home. But once everything comes in and you got the green light, the lender will then draw docs and you can close on your home and move in less than I say 30 days, 30 days or less. Some lenders, they might have a different turn time with getting your loan through the transaction or through the process. But with a CalHFA down payment assistance, you can close on your home in 30 days or less. It just depends on the underwriter, it depends on the lender, and what their current turn times are. Once you close on your home and you move in, you're now a homeowner. Woo! Congratulations. So once you're a homeowner, you then will be set to send your mortgage payment. So with our programs, your mortgage payment for your first mortgage will go to Loan Care. And if you opt to make a payment on the down payment or closing cost assistance programs, if you will make those payments to CalHFA. We will act as the servicer on the subordinate liens. And you're happy and you're being a homeowner and you're gaining equity in your home. So that's a great thing. But I encourage you guys all to take that step and contact a CalHFA approved lender. If you see on my screen, you will see an arrow to our website, and it can take you to a list of all the lenders that we have available at CalHFA. Once you go to our homepage, our website is calhfa.ca.gov, and you'll click on the button that states Find a Loan Officer. From there, that screen will take you to all the options available to you. You can choose to work with one of the top hero loan officers. You could search the preferred loan officer list, or you could work with any of the options available on that website. I believe we have a list of building Black wealth lenders. And ideally, that's a list of lenders to help increase the initiative to Black homeownership. But I thank you so much. Before I end, I have this also, I have another, um, sorry, my cursor is not working. We also have another program at CalHFA. It is called our Cal Assist Mortgage Fund Program. If you see the red arrow on the screen, it's pointing you in the direction to information for our Cal Assist Mortgage Fund program. This program is administered by CalHFA, and it's there to help families who are suffering from a hardship and having trouble making their mortgage payment because their home was destroyed or destroyed due to a disaster. Recently, we had fires in the state of California. So if you know someone that owned a home and it was their primary residence and their home was destroyed due to a disaster and they need assistance making their mortgage payment, please take them to the Cal Assist Mortgage Fund section of our website. You'll see the arrow on the screen pointing you to where they can find additional information on how to get assistance through that program. And I thank you guys all for coming out. I know that was a lot of information. I am more than happy to help answer any questions from the community.
Definitely. Thank you, Natasha. And I included the links to the Find a Loan Officer webpage on CalHFA's website and the CalAssist Mortgage Fund Program. And looking at, Natasha, I know you had some handouts. I'll make sure to drop those in the chat as well for everyone. Looking at the questions, one of the first questions is, in regards to the CalHFA program, where do we find a lender that is a CalHFA program?
Absolutely. Clicking the link, find a loan officer, would certainly take them. So first you want to go to our website, which is calhfa.ca.gov. And that website is listed here on the screen where my red laser is pointing. That's the website that you'll go to. And then to find a CalHFA approved loan officer, you're going to click on the Find a Loan Officer, and that will take you to all the options available to you to pick someone to work with.
All right, the next question is for the FHDA Limited 203K program. Do repairs need to be done by a licensed electrician or plumber, or can they be done by a handyman?
Great question. So I highly recommend that you contact a CalHFA approved lender. I can actually drop some lenders that I know that are approved and offering and okay with offering the limited 203K program with our down payment assistance. I will drop their information. So I know that it's New American Funding and there's another lender. I don't have that information. Let's see here. New American. So it's New American Funding and Alameda Mortgage Corporation. Those are the two lenders that are, there's other lenders, but those are the two lenders that we have a loan officer on our preferred loan officer list. I would contact one of them to ask that detailed question. I do know that a lot of the repairs, keep in mind that it's minor repairs, that nothing structural, so no wall knocking down. The minor repairs of electrical work, they're going to have to follow FHA guidelines, and that's who's holding that first mortgage. And I don't want to misquote, so definitely talk to a lender, and they can give you specific information on if the electrician needs to be licensed or not for a limited 203K.
Right. Thank you, Natasha. And another member of the audience asked, are there San Diego specific programs, or do these CalHFA programs work in conjunction with those? I think maybe they might be asking about programs
Layering.
offered layering. Yes.
Yes, absolutely. That's a fantastic question. So all the programs that I talked about today, they have the capability of being layered with other programs. I do not know a program in San Diego off the top of my head that can be layered, but it is imperative to talk to a CalHFA approved lender, and they will, if they have the resources at their fingertips, they're going to work for you and determine what all other grant programs or other down payment assistance can be combined with our programs. But I don't have the specific local or city government agency, but it's possible. But it is possible. Talk to a CalHFA approved lender for details.
Thank you for that. And then another member of the audience is asking if there are any other specifics about new construction. Can it be a manufactured home? Does it cover utilities, install, electric, water, etc.?
Okay, so I'm thinking that they're asking, is the limited 203K for minor repairs available on a manufactured home? I'm not too sure. New construction, is it available on new construction? And I'm gathering that this is all relating to the limited 203K program. And if it is, you would definitely work with a CalHFA approved lender on if you can do the limited 203K with a new construction. But in my eyes, I'm thinking if it's a limited 203K and it's a new construction home, it's new. So typically, the limited 203K would be for an older home, unless now something came into my mind, unless there's appliances or you're having to pay for redoing the backyard and adding grass or pool. Those are great questions. And I'm here to tell you that the program is available with our down payment assistance. Talk to a CalHFA approved lender. They're going to give you a list of the items that can be included within the limited 203K program and what types of properties are available on that program. So hopefully that helps. Sorry, Jessica. But
Thank
give me a
you.
call if you have questions.
Thank you, Natasha. And I think just to piggyback off that, one of the questions is if we have to repay the money made for the money for repairs that are, utilizing the limited 203K program.
Great question. So keep in mind the limited 203K, and I want to go back to my slide. I'm going to go back here just so that we're all on the same page. Just keep in mind that the limited 203K program, it's a program that allows you to finance up to $75,000 for minor repairs. So you're financing that $75,000 into one loan with your first FHA loan amount, right? So you're paying that $75,000 is amortized over 30 years. So it is something that you're paying back. That's separate from the down payment assistance or closing cost assistance that CalHFA offers. This is just, I see this as a way for someone that's looking to become a homeowner. Maybe they came across a home that is in need of a lot of repairs and they're okay with, getting those repairs done. Some home buyers might say, hey, it's not for me. I want to purchase a home that's already move-in ready, right? I don't have to worry about new carpet or new plumbing. But for those that are okay in considering this FHA limited 203K, the $75,000, you're financing that into one loan. Plus, you can receive down payment and closing cost assistance from CalHFA. So that's $75,000. Again, it's amortized over the 30 years. So you're making a payment to that $75,000 it's included with your mortgage payment and it's amortized over the 30 years. Whereas, let's say if you purchased a home and the seller was unwilling to give you a seller credit and the home was in need of repairs, if you needed to get those repairs done, you might use your own cash that you've saved, or you might try to put it on a credit card where it's zero interest for maybe 24 months if that's available. This is just another affordable way for you to finance the cost of minor repairs into one loan. So I hope that helps.
Thank you for that comprehensive answer, Natasha. Another question, to combine two questions actually. Are there any requirements regarding home prices? Is there a maximum home price these programs can be applied to? The examples you provided were with $600,000 homes, but in much of San Diego County, prices are closer to $800,000, with many new builds starting in the low millions.
Yes, that's a great question. Great question. We don't have a maximum or minimum purchase price requirement. What we tell lenders or consumers, you will follow the conforming loan limit per the county that you're living in. And so conforming loan limits, they change depending on the county. So if you're someone that's purchasing a home um, in Sacramento, the conforming loan amount for your first mortgage, the highest that it could go is 806,500. For San Diego, the conforming loan limit, because that's a high cost area, is a lot higher. So that your CalHFA approved lender will give you the specific maximum loan amount that you can have on that first mortgage. Hopefully that helps.
Thank you, Natasha. That was very helpful. Another question is, does each loan program, My Home, CalPlus, etc., have different income limits?
No. That's a great question. Our income limits for all the programs, whether it's My Home, Cal Plus Zip, or Cal Plus Access, they all have the same income limit, and it's based off of whatever county you're looking to purchase in. Your income, all borrowers on the loan would have to be in the county's income limit.
Thank you. And do we have to submit our bank statements if we provide pay stubs and W-2s?
Great question. So when you go and contact a CalHFA approved lender, which please guys, go visit our website and click on find a loan officer, select top heroes or the preferred loan officer list. Great people listed on our website. You will, you will contact them, let them know that you're interested in a CalHFA down payment and closing cost assistance program. Once you call them, they're going to let you know, okay, we need you to fill out a loan application. We're going to pull your credit. And they may ask for bank statements, income documents. Some lenders might want bank statements up front. Some might not. Each lender is different and varies, but you certainly want to make sure you're prepared before you contact them because they may need the bank statements as well. And just bank statements just to make sure you have enough money in your account to meet the closing cost requirement. But just contact them because it can vary. At first, they may not need the bank statements initially going in.
Thank you. And would you be able to provide more information on manufactured homes, ground set, pit homes, where you pay space rent monthly?
Fancy, Beth. I like your question. So when I think of a manufactured home is a home that's built off-site. It might be built in a manufacturing warehouse, and then that home is then transported to the land that it's going to be permanently affixed to. Now, the CalHFA approved lender will give you more details about this. But when you're buying a manufactured home with CalHFA's financing, you want to make sure that you own the home itself and it's on a permanent foundation and it's double wide and you own the land to that home. But talking to a CalHFA approved lender, they're going to go in detail and answer a lot of those questions that you might have on qualifying. The requirements that I spoke of today, it's simply about down payment and closing cost assistance and what we require. That lender that you contact, they're going to make sure that you meet our requirements and the requirements of that first mortgage. So there might be additional requirements that you have to meet, and that trained mortgage professional will be able to answer all the questions that you have.
All right. So thank you so much, Natasha. I know we're coming in on
No, this
7
is great.
p.m.
No, it's great.
Get through one or two more.
Yes.
See, with USDA financing, can the My Home program up to 18K for closing costs be used for new construction?
Absolutely. Absolutely. Remember our property requirements. It can be a new construction home or a resale property. When I say resale, that's when you're purchasing that home from an existing seller, right? So new construction, our program works with a new construction home purchase. In fact, I know that there are a few builders one that I can think of that's approved, Lennar Mortgage, they're approved. They are a builder that's approved to offer our programs. Lennar Mortgage. Lennar is a builder.
Thank you, Natasha. And see, for the USDA loan, is that just for land or a property that comes with land?
Great question. So When I say USDA, that is where a consumer is looking to purchase a home within a rural area. And USDA has a website that lists that's a website where you can type in a property address to determine if the specific property you're looking to purchase is considered rural or not. I can drop that link in the chat just so that you have it. But again, talk to a CalHFA approved lender regarding going USDA, because not only does the lender need to make sure that you're meeting our requirements, but you will also have to meet the requirements of USDA. And sometimes they could have stricter requirements when it comes to purchasing a home in a rural area. I don't know if I can drop this link in the chat. I don't know. Can I? Sorry. Oh, you know what I'll do is I will answer it to you privately. And anyone else, if you're interested in receiving that link, you just send me an email and I'd be gladly to share that with you. But the ultimate goal, guys, is to contact a CalHFA approved lender. We at CalHFA, we're not a lender. We don't have the ability to pull credit or to look at your income documentation or assess whether or not you're approved. That lender is responsible for making sure you meet the first mortgage guidelines as well as CalHFA.
Thank you, Natasha. And I know we're coming in on 7 o'clock, and I want to be respectful of everyone's time. So I think at this time I'll start just wrapping things up. I just want to thank everyone. Again, everything has been dropped in the chat, all the links and different handouts that Natasha wanted to make sure you all received. If you didn't get a chance to grab those, if you joined after the fact, please feel free to reach out to our office. I'd be happy to send that out. I can also send that out to everyone after the fact, everyone who was in attendance. And definitely just want to say we're very appreciative of you taking the time to come here and educate us about the different programs offered through CalHFA, Natasha. We really appreciate it. I feel like I've learned a lot. I hope, based on all the engagement we've had in the Q&A, that I think a lot of people have learned a lot, and hopefully it's beneficial for everyone in their home buying journeys.
Yes, this was a great experience. I'm so glad that you all came out and took time out of your day.
Definitely. And I see the assembly member wants to thank you all as well. And thank you, Natasha, for the presentation. And with that, everyone, I wish you a great rest of your evening. And please feel free to reach out to our office, and I'll make sure you all have Natasha's contact info. If you have any questions, I'll make sure to forward them along to her as well, try and get you some answers. You can feel free to call our office or reach out via our website. Always happy to chat and help you find out more information. With that, thank you so much, and everyone have a good evening.
Thank you.
Okay, thank you, everybody.